Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed right here on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this afternoon, we have Chris Dearborn. He's the managing director on Nasdaq's market intelligence desk. For our midday update, Chris, it's great to have you on with me as always. And you know what? Relatively speaking, the Nasdaq-100 is outperforming the other indexes in a red tape. Amazon almost within 2% of its all-time high, certainly getting some help there. What are you taking a look at in the market this afternoon?
Well, thanks, Jill, for having me on again. We had an outstanding week last week, even though it was a holiday-shortened week in this environment. Every day counts. And we had flat to higher movement across the board for the entire week. All the major indexes moved significantly higher. And with that, you're holding your breath, waiting for a shoe to drop. Now, today, even though the markets are off and the Nasdaq-100 is holding up much better because of the leadership there, this pullback isn't feeling like the pullbacks that we felt in March and again in the beginning of April. It feels more like a pause here as the momentum guys and also other investors take a deep breath, take a look at what's going on in the market as a whole, and then kind of get their hands around what to expect this week and coming up in earnings.
All right, let's take a look at our first chart today. We have Nasdaq-100 on a daily, taking a look at a couple of technical levels using Fibonacci.
Absolutely. So the fibs that we've looked at the last couple of times have not lied to us, and they're giving us a good parameter of where the stock should be going, where it's come from, and hopefully where it'll go back to where we were pre-corona sell-off. You know, again, fibs use a 0 to 100 level. They compare bullish and bearish price momentum versus the asset class on the graph. And what you're looking at is 0, 23.6, 38.2, 50, which is the halfway mark, 61.8% retracement, 76.4, and then obviously the 100%. The Nasdaq-100, and when you're looking at the chart with the different Fibonacci levels, is butting heads right up against that 50% retracement level between the March lows of 67.71 and the February highs. Now, if you look at where the index has been, last week alone it had an increase of over 9.5%, truly remarkable. And what you have here is it's rallied 21.5% from the March lows, and the index is trading right up against the 200-day moving average. It's been waffling back and forth between unchanged and slightly higher today, which is an excellent sign of the leadership in the index. And what you're looking at here is if the index can continue to hold above the 38.2 retracement level, which is well below us at 79.04, and hold right here at that 50% retracement level, it's going to confirm that you have a movement in place that is relatively bullish. Remember, the 50% level is not a true Fibonacci level, but it is a level that is used to confirm a movement in the index or any of the underlyings that use Fibonacci's on of a trend that is now in place. And this trend, while consolidating here along the 200-day moving average and at the 50, which is 82.54, kind of right where we are right now, it's confirming that this is a bullish trend. And if you look at the bottom of the chart on the RSI, you can see we've moved from deeply oversold conditions near the 30 level. Remember, RSI uses 0 to 100. 30 is oversold, 70 is overbought. And we're trending right in that midpoint around 54, which is a sign that there is buying momentum in the index and the underlying equities. If this trend holds, look for it to eventually target above the 50 and move to the 8600 level, which is a nice retracement from where we have been.
All right, Chris, let's move along to next chart here, one of my favorite ones that you put out there for us, showing a heat map where the leadership is in the index.
Absolutely. So again, the index is market cap weighted, and you're looking at some of the larger stocks in the index. They're all large cap names, some are mega cap names. But again, the breadth here and the leadership is significant. You're looking at a handful of stocks that are carrying the majority of the points and the big moves. Tesla's having a big day today. When this graph was taken this morning, it's up 10. Now it's up nearly 12%, adding 12 points to the index. Netflix is up nearly 7% now. a full percentage point higher, carrying 11 points. The big baby here is Amazon. Amazon, if you look at a Fibonacci retracement level of Amazon, it's trading near its all-time highs right now, which is truly amazing, made back in February. And that's carrying 45 points, up over 5.5% in the index right now. It's given back a little bit, but it's still higher than where we were earlier. You put those together along with some of the other leaders in the indexes, and they're all major cap names: Apple, Intel, AMD, NVIDIA. You're having a very nice move today. And the stocks that have been leading the Nasdaq-100 index in the past couple of weeks: Microsoft, Pepsi, Alphabet, Facebook, Comcast, they're down slightly, 1% to 2% overall, but it's time for those stocks to have a pause too. And if you look at the Fibonacci on those, not only are all those stocks trading well above the 50% retracement level, they're trading towards and confirming the trend towards that 61.8, the 76.4 retracement level, thus showing that the stocks in the index have room to run because the overall index RSI is only at 50. So you still have room to move here, barring anything macro or anything negative on the coronavirus or the global economy due to the coronavirus.
All right, and let's wrap up here. Finally, coming into earnings season, I'm sure we're going to appreciate that when we have the opportunity to look at fundamentals within corporate earnings and move away from this vacuum that we've been in solely on macro data and COVID-19. Chris, what's your thoughts here? A lot of people are saying this is a throwaway quarter. I can't imagine that anything's ever throwaway, but it's going to be really difficult for companies to put forward guidance out there. When does it really start to count? Third quarter, fourth quarter?
We're going to be getting a good look at the banks first. And again, the impact there is going to be setting the tone for the rest of the earnings season. Guidance is out the window for the most part because you can't really guide when you don't know. And until you know the economic impact of this, not only domestically here in the U.S., but more broadly, since most of these banks are international conglomerates, you don't understand what the impact to the earnings is going to be, much less how can you forecast something when you don't have the fundamentals. So you have to look at the technicals here. The question is, what are they going to mention? What's the impact that they've had so far? Because the key here is March was a fear month on the economic data, also on the corporate side. Now you get some good looks at the economic data that's coming in. The non-farm payroll number from a while ago it was bad, but not as bad. The unemployment numbers are relatively in line, though higher with what they're thinking. So what you're looking at here is how those individual names are going to be impacted. It'd be interesting to see what the banks have to say. They're kind of the lifeline to the small and mid-sized businesses now, especially with what the Fed has announced. And we really need to listen to what they're saying about the future of the company, not so much as where it has been.
All right, Chris, great to have you with me as always. Thank you so much.
Thank you, Jill.
All right, and thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.